I've gone to the edge of a building thinking of, like if I should jump down or not. If you have traded for 2 or 3 years and you haven't had a, say, streak of 3 to 4 months of profitability, maybe you're not good enough.
Yeah.
Right? And maybe you shouldn't really worry about trading the markets early. Put money in a mutual fund, do a SIP, whatever. And maybe not even do direct stocks, because maybe that's not the right product for you, right? And this is something I've been quite vocal about.
So I wanted to, for our listeners, wanted to understand more about the emotional burden that you had to face when you went bust. Like a lot of people do get bust and then they do not come back to the equity markets for years and decades. Like what was different that you did that you got back, twice, thrice over, and actually got the better of the markets? Welcome, Nithin, to this podcast, and thanks so much for taking out time, especially considering you have not been accepting podcast requests since a few months now.
No, thanks, Vivek, for having me. I mean, the podcast request again. It's just that everyone wants to know Zerodha journey, but as soon as you spoke about the topic that you want to talk about, that's very close to my heart, because we are looking at every opportunity to kind of help people understand kind of mistakes that you can avoid do. While trading and investing in the market. So yeah, thanks for hosting.
Thank you. And of course, nudges is something which is very close to your heart. And I think I've seen very, very few entrepreneurs at your stage being so altruistic in terms of cannibalizing your own volumes, revenues in the interest of the investor. So Nithin, what I would like to start with, what is the first investment you ever made? I mean, whether it was a fixed deposit, a mutual fund, a stock. I mean, what was it and how was your experience with it and why did you make that investment?
So I got introduced to trading, because of some Marwadi friends.
Yes, you had mentioned, yes.
Yeah. So I was doing day trading before investing.
Okay.
So it was essentially, go to a dealer and, sit and look at a stock and try to predict which side it goes. So I've never invested until I think a company called Shalimar Products, a penny stock.
Yes. Okay.
So I bought it at 5 paisa, sold it at 1 rupee, and I thought making money in the market is very easy. So, but I was mostly an active trader. I think one of the things I started doing when I started making a little more money was around my birthday. I started gifting myself IPOs. In the sense, buy some company's IPO around my birthday, or use any events or events as an excuse to invest into a company that I thought I'll hold for long term. But in 2001, I went bust, which meant that all those investments I thought I'll hold on forever, I ended up selling it. I also in between, while doing engineering, I thought I'll also do GMAT and go abroad. So I sold some stocks that would have gone up 1000x from there to pay for those GMAT fees, which I regretted for a long time. So so mostly it was I've been a day trader.
And were these tech bubble stocks, most of them?
Not really. I mean, in my early days, which was the late 90s, early 2000s, it was mostly penny stocks, right? And but penny stocks for buying and holding. Buying and holding for a few days. Day trading was where there was more liquidity, so it used to be the top 100 stocks.
DCQ software, HFCLs of the world, possibly.
So, but 2001 is when Nifty futures got introduced,
right?
And that's when I got hooked onto Nifty futures, because for me, when you're trading stocks, there is an insider who knows a little more about the company than you.
Right.
Like, whatever you wish and hope that, that information spreads, right? And I think trading is about kind of playing to your strengths. And if someone else knows more about a big company than you, then it's a problem, right? And so with the index, the love was that there is no insider of sorts, right? As in,
it's evened out.
It's kind of evened out. And also with index futures, you got an opportunity to stay short for long periods of time, which was hard to do it in a in a non-futures world until then.
So the margins are also lower, I guess.
Yeah, I mean, it was okay. As in, it wasn't low per se. I think
Okay.
stocks was probably lower because
Is it? Okay. Okay.
this was one of those
Sure.
times when there was unrestricted leverage.
Leverage. Yeah.
Based on the relationship, you could get as much leverage as you want. So
Right.
futures, in a way, was not as levered as
Okay.
stocks. So yeah, so 2001, I got introduced to that, and then yeah, I've gone bust two and a half,
Yeah.
three
So I
times.
wanted to, for our listeners, wanted to understand more about the emotional burden that you had to face when you went bust. Like a lot of people do get bust and then they do not come back to the equity markets for years and decades. Like what was different that you did that you got back, twice, thrice over, and actually got the better of the markets?
I mean, I keep giving this example that there is a very thin line between passion and foolishness.
Yes.
So if it works out, you are called passionate. So I think generally, if I were to go back in time, I think I was being very foolish. But I thought I had found my love in trading the markets, right? And I think if I look back at my journey, I think what worked out well for me was that I was trying to build a career around something I love to do.
Mhm.
So even when you slip up, you're learning with every experience, right? But the thing is, I don't think everyone should even come back to the markets. Like if like I keep
Right.
advising most of my people that I meet, saying that if you have traded for 2 or 3 years and you haven't had a say streak of 3 to 4 months of profitability, maybe you're not good enough,
Yeah.
right? And maybe you shouldn't really worry about trading the markets early. Put money in a mutual fund, do a SIP, whatever, and maybe not even do direct stocks because maybe that's not the right product for you, right? And this is something I've been quite vocal about. And but I think I kind of figured out that this is something in which I'm decent at because I had long streaks of profitability, and I usually when I blew up, it was few days of stupidity, and
Yeah, that's what. Yeah.
and
But what's the attribution of the skill which is there? Because, I mean, there are more traders than investors in the markets globally and since decades. And very, very few, like maybe less than a percentage, succeed. And in the long term, these numbers could be even lower. What's that you attribute your success to?
no, I think Nikhil, my younger brother, I think is a much better trader than I am, and genetically, I think we both aren't the types who get affected by PNL very easily.
Okay.
And I think that's the most important characteristic of a good
So you
trader.
didn't lose sleep anytime when you got busted.
No, I mean, I did lose sleep. I know what I'm not saying like that. On a day-to-day basis,
Okay. Okay.
right? I mean, when you're in extremes, when you're pushed to extremes, you will lose sleep. I don't think
Right.
any human can get away from it. But on trade-to-trade basis, on a daily trade basis, I wouldn't get very excited if I made money, or I wouldn't,
Got it.
suddenly feel frustrated if I suddenly lost some money. I mean, so just to remain rational when you're pushed to the test
Mhm.
is what differentiates people. Even not just in trading, you pick up sports, music, whatever. Right?
Right.
As in, if there are 100,000 people looking at you play cricket and you can hold your nerve, only few
Right.
people who can do it, and those are the kinds who kind of succeed. Right?
Got
As in, even in trading, it's mostly that, and it's about being just remaining rational around the times when it is it's you're put to test of sorts.
And when did you decide that enough is enough in terms of active trading and putting a large portions as your own net worth grew? I'm sure the risk appetite would have reduced, is what happens typically. So when did you decide that trading is something which either is too risky for my wealth or it is too small for it to move the needle?
Right. No, I don't see. The thing is, the way Zerodha evolved was around 2008-9. We had made some money in that 2008 crash,
Right.
and Nikhil had joined me by then, and Nikhil was generally a better trader,
Right.
right? So the question was, if why should two people sit and trade, right? Because trading,
Right.
what one person can, two people can do, one can do better. As in a
Yes,
sense,
yes,
you just have to
yes.
allocate more capital. And I generally historically had like this whole kida of trying to talk about markets and educate. So I used to run really large communities. So Zerodha was an extension of that. I was interacting with so many traders, active traders on these forums, and everyone had these complaint about being, high charges, and having brokers who are not very transparent. So, and as traders, one of the problems we were facing was exactly the same. So we thought, I mean, the plan was that we'll start a broking firm. So Nikhil continues trading. I attempt building the broking business. If it doesn't work out, I'll come back to trading. I mean, that
But
was
sorry to interrupt you here. So this trading that either Nikhil does, or let's say if you come back, would it still be the same constituent of your bigger scheme of things, or I guess it would be much smaller, right?
it's not possible, right?
Yes. So it'll be much smaller, more for the passion of it rather than the money making of it.
No, I mean, no. There is Nikhil trades to make money.
Okay,
So
okay,
in
fine.
the sense, there is
Sure.
no trading just for passion. So I think one of the things, like especially a market like India, it's the market depth isn't too large to handle large trading volumes.
Mhm.
So as you grow bigger as a trader, it becomes harder to make money.
Right.
Unlike what most retail think.
Yes.
Right? I mean, just to give you an example, I think we bought, I think 3 or 4% of a company, and when we bought, we moved the stock price up by 15%,
Mhm.
right? Which means, and if you want to sell it, we'll probably move it by 10-15%
Yeah,
down.
you might not be able to sell also.
Yeah. So in the process of buying and selling, you're losing 15-20%
Right.
just as an impact cost. And but as a retail investor, you can get in and out at 5 paisa impact cost, right? So which means as a trader, you really have an edge as a small retail trader to be able to enter and exit without any impact cost at all. So I mean, that's one of the misconceptions that people have, that as you become bigger, you can somehow start generating like more profits. It's actually gets
I
much
think
harder.
people have this belief that as you get bigger, your access to private information gets better and better. You have some information that other guys don't have, but which is very far from the truth, I guess.
Correct. Yeah. No, but the other thing which happens as you grow bigger is that if you do your asset allocation properly,
Right.
your ability to take risk also increases, right? In the sense, I don't think, like, one of the things I've learned by going busted, like two and a half times, has been that I don't want to be pushed myself in a position ever where I don't know the outcome of a trade. Like, in the sense, like,
What's the maximum loss that you
yeah, correct. Yeah, you kind of make peace with it, and then you enter a trade. Then the chances of remaining rational increases.
Right.
Right. So it's one of the things that I kind of have learned.
But what would you advise? People. A lot of people have come into the markets for the last 4-5 years who have not seen very long drawn recessions. If you see the period from 2008 to 13, equities hardly gave any kind of returns. You saw 2001, 50-60% down. So people get unnerved by even a 15-20% fall. We keep meeting investors where 10% fall, they're like all over the place. So what do you suggest to people, like investing, trading, and if it is trading, some basic suggestions for them?
No, I mean, this is something I keep talking about. See, the thing is, there is no guaranteed way of making money in the markets, right? I mean, you've done this for a while, I've done this for a while. If someone comes and says, Nithin, what is like the holy grail of trading? I don't think I mean, I don't have an answer for sure, right? The best I think we can do is avoid money mistakes, right? I mean, so the thing here is that if you reduce your money mistake, your odds of making money increases. And I think the money mistakes that people should avoid, that is very kind of clear and evident, right? As in, which is not to concentrate into a stock, or which is understand this whole averaging down. Like when I look at our customer base, I think one of the biggest problems is averaging down, right? Which is when people feel a stock is cheap, when it goes lower, it feels cheaper, right? And the tendency is to say, now let me buy more, right? I mean, we saw our customers buy more and more of Yes Bank as it did that 400 to 10 rupees journey. So
I released a note just a week back about stocks down from the 52-week high. So future consumer was down to 1 rupee from 8 rupees. And 8 rupees, incidentally, was the low of the last period also. So it can always go 100% lower. One more thing in the extension of this question is, how did you manage to secure your family while you were trading, while you had your own business, Zerodha? I mean, both these activities are typically high risk activities, and now the startup culture is very, very thriving in the country. People are taking the steps towards doing their own startup, joining a startup, without at times keeping their family security or rainy day funds in place. How did you manage to do that, and what do you advise people who take this step?
See, the thing is, with Zerodha, I mean, we've just had just a phenomenal outcome, right?
Okay.
So I don't know if I would, my what we did really can,
Can be
can be
replicated.
replicated by many people. I mean, what we've done essentially is made sure that our lifestyle doesn't catch up with the net worth,
Net worth.
right?
No, but
Because
in the initial days, like really initial days when you maybe just started off, like how did
no,
you
I mean, I was
ensure?
quite aggressive as a trader. I
Okay,
was
okay,
aggressive,
okay,
So I mean,
okay,
but I also learned over time that being aggressive, hurts.
okay.
One of the things I think I also realized with trading is that if trading is your only source of income, it's hard. The pressure to generate,
Right.
is so much more. That's how I ended up becoming a sub broker for Reliance Money.
Okay, okay.
Like and I said, if there's another passive stream of income, maybe my trading, will improve. It actually did, So I haven't blown up after 2005, 2006.
Okay, interesting.
So usually
Yeah, this
my
is a good tidbit. Having a separate source of income, cushions your risk here, and you can be more free while
yeah,
trading.
because otherwise, trading itself is hard. Now,
Right,
using trading to put food on the table is extremely hard.
right, right. Yeah, that's
Right.
that's a great piece of
Right.
advice.
So yeah. So I mean, I've done that. I think as and when with Zerodha as a business grew, we said, to maintain our lifestyle, how much money you need,
Right.
and we took that money and put in a bank fixed deposit, which is ring
Okay,
fenced.
interesting. Okay.
So Zerodha is generally, like now we don't think of Zerodha. I mean, with Zerodha, though, a bunch of us, we look at it almost as we are doing this for impact and not really with the money objective in mind. But one of the things I've also realized, which is probably an answer to your first thing that you pointed out, is that if you think about impact and you create impact, money automatically happens, right? Like this, you don't really have to chase money to make money, and you can chase impact, and if you do well, money automatically follows anyways, right? So with the first thing that you pointed out, which was why we are probably one of the few brokers to have these nudges and willingly let go of transactions.
Few or the only broker?
I mean, we're probably the only one,
Yeah.
so who actively dissuade customers from trading.
Yes.
See, the thing is, now if you were to ask me, is this being altruistic? If you think of it 6 months to 1 year long, it seems like altruistic. Right? But if you think of business 10 years out, it's probably the smart thing to do, right? I mean, you want your customer to survive longer. You want him to do well much longer, because if a customer does well, he will bring in more customers, right? And because we don't advertise, and the only way we rely on growing is through word of mouth. So if a customer remains in trading and investing for 5 to 10 years, he will bring us more customers on his own. Now, how do we get him to remain trading? We want to be keeping him in the money, to avoid him making mistakes. So in a way, it's not altruistic. I think it's the right thing for a businessman to do, which is to find ways to think of a customer longer term versus shorter term. Today, the problem I think with capitalism as a whole is that we're all chasing really short term goals.
Right.
If you're looking at maxing your revenue for the next 3 months, 6 months, you will want him to trade as much, right? But if you think about it as 10 years out, and you say, you know what, I want to generate income revenue for 10 years long, then you'll automatically do what is right for the customer.
User, yeah. And what's in your experience, what has been the loyalty metric for users at Zerodha? Has it been the pricing? Has it been the fact that it is things like varsity, etc.? What do you think has been the defining or the trading experience?
I think it's definitely not the pricing, right? Because pricing is probably a kicker. Pricing is not the primary thing, because right from when we started Zerodha, there were people offering brokerage at low cost.
Right.
In 2015, when we launched Kite, in-house trading app, from then the journey became the product journey, right? Until then, I think the edge was more about transparency, low cost, thinking of the user constantly, right? And that has remained like over the last 12 years, if you were to ask what have we done right as a business, I think we have never done anything which is wrong for the customer.
Okay, great.
Right, and saying it and doing it are two different things, right?
Right, yeah.
And because it's very easy, right? As in, when you have large groups of customers, it's very easy, for example, for us to send a push notification and get people to take a trade, right? And which will generate revenue, but that's not right for the customer, right? And so I think it was low cost and transparency at the start. Then it became education. Then it became products. Then with Rainmatter, it kind of became an ecosystem of products when we allowed startups to come build on top of us. And then the product kept getting better.
Speaking about your altruistic nature, I can vouch for the fact that since we are a Rainmatter funded, part of the same family, you guys actually provide a lot of accelerator services without taking any equity for that. So we have been greatly helped by your entire team. So,
no, I mean, I think with GoalTeller, we still haven't found like a apt integration. But for a lot of startups, we've actually given them the first 10, 20,000 customers, which is very crucial, right? I mean, you are lucky that, I mean, you're not lucky, you're probably smart that you had a prior experience and then you extend into GoalTeller.
Right.
So on
it's
day
like
one,
that your thing about sub-brokership, which is feeding this business of ours.
Correct. So that way, you already have a certain business. But for most people who started off, they don't have a business on day one. Right. And to get to your first 5,000, 10,000 customer is really, really hard. And so I think one of the things that we did well which we have done well with Rainmatter is to kind of help these customers go get their first bunch of customers.
We are in the queue.
Right, yeah.
And Nithin, could you help us get a couple of anecdotes about some customers who have reached out to you directly, being very happy with what you've done, and the other side, some irate customers who have been extremely unhappy over your life? Do you have any such interesting anecdotes to share?
Tons of them. So there are tons of. See that we've gotten to 11 million customers without ever doing a single marketing or advertising campaign. So you can probably kind of understand there's a lot of good word out there, right? So I mean, I've got zillions of such I get emails. The thing is, I also sometimes. See, the thing is, the question we ask within Zerodha today is, what is the reason we exist as a business? And we all think that today we exist because we need to help our customers do better with their money, right? Of course, we offer low-cost products, we offer a nice trading platform, etc. But eventually, if you're not helping them do better, what's the point of even being around? So I think, when I receive all this positive feedback, one of the things which keeps sticking in my head is that, probably we haven't done enough to kind of give back for all the love and,
Anything specific incident that touched your heart or did not touch your heart from the opposite side?
No. On the negative side, a lot of them have touched my heart. So they've touched my heart so much that I've gone to the edge of a building thinking of, if I should jump down or not. Yeah. So
any such example you?
No, the thing is, the first time we scaled. See, the big issue for us, historically in the last 12 years of Zerodha, which has impacted our customers negatively, is when we didn't scale as well as a product. In our business, every minute you're down as a platform, it can affect someone's profit or loss. And it's quite frustrating as a trader if a platform is down. I think in 2017-18, I think we had at least 4 or 5 incidents in that year where, we are down between 10 to 40 minutes, through the day.
Right.
And it was mostly because of our dependency on external vendors. And we've been trying since then, every 3 months, 5 months, we are reducing our dependency on external vendors on anything at all, right? So, and also stock broking, the stock trading platform business is a very complicated business, right? Because everything is live, everything is in microseconds. You're connected to stock exchanges, to depositories, to clearing corporation. You're connecting via leash lines, which are flapping. So there are so many dependencies that can affect the trading experience. And so some of these learnings, we had in 2017-18, and even today, I think, even if if we are down for 30 seconds, say our charts are not working, my inbox will be full of, your cheat con fraud, so so it affects, but but there's no way around this. I mean,
But that happens with manual traders also. When you call up someone, the guy can be busy.
no,
And I
manual
think-
trading is dead now. So I don't think any. At Zerodha, we do I think close to like 150 to 200 million orders a month.
Wow.
And out of which 150 orders are call and trade orders now.
Oh, okay.
So there is, not just Zerodha, across the board, everyone has got access to a mobile app. Everyone's got, so everyone's trading on their own now. So.
Right. Thanks for all the insights. Coming to nudges, which is something which has been very close to your heart and has helped users on Zerodha tremendously. I believe a few days back you did mention that 90% of volumes in such kind of stocks have got reduced through your nudges. Could you help us understand maybe 2-3 actual examples of stocks where a nudge from your side has helped users distinctly over the last many years?
The idea is to get the customer to do lesser mistakes, right? That was the reasoning behind nudges. And the easiest nudge for us to implement was around the penny stock nudge, right? Because in 2020, when the first bunch of customers who came to us, these were first timers and people who didn't understand that a stock at 8 rupees could be very expensive as compared to stock at 800 rupees, because everyone thought that lower the cost price, cheaper it is, right? So we had to do something about slowing them down and kind of educating them, saying, just because this company is at 1 rupee, 2 rupee, 3 rupee doesn't mean it's cheap. Yeah. And it doesn't mean that the odds of it going higher is much higher. So that's when we incorporated the first nudge, which was around penny stocks. So when someone buys a penny stock at Zerodha, we actively dissuade the customer saying it's a penny stock, it's a high risk stock. Even if you want to, it's not paternalistic, so we're not saying you cannot trade these stocks. What you're saying is
just pausing them.
Yeah, you're just slowing them down.
And what do you define as a penny stock here?
So there are different criterias, but typically anything less than 100 crores of market cap.
Okay.
Right. Again, we're not showing the nudge on every stock. We show nudges on stock, which kind of keeps going up based on if we see that a lot of spam SMS messages or YouTube videos, etc., is getting produced, where people are trying to peddle the stocks. When we spot or we figure companies which don't even exist, right? There are so many companies which just have an address and they're still listed.
So are you trying to say you guys actually do a manual check, a research
So
from your side rather than just an automated algorithm which segregates stocks less than 100 crores?
Oh, yeah. So we have one basic filter to take away all stocks which don't qualify the market cap. But after that, we apply manual checks, which is we are looking through different databases to figure if these companies exist, don't exist. Yeah. In the sense, everyone exists, but is it real or is it fake, or are there spam SMSs being pushed, or are there advisors who are suddenly getting up and trying to peddle this? Yeah. So we. Thanks to the communities that we have built over time, so we get a lot of market intelligence through those communities.
Right.
And so we don't say don't do it. We say just be aware of it. Right.
But I do recollect that there are certain stocks you have actually dissuaded people completely from doing in the last 2 or 3 years, where there has been a certain news event or a corporate action which does not warrant a purchase.
Correct. Right.
So any
what we have done is we still didn't kind of disallow. We had introduced like an authentication in between. So we had said enter an OTP to place an order in this.
Okay.
So we just made it harder because it was a no-brainer. Stock on its way to zero, which very clearly now there's suddenly some people thinking they want to buy.
Which one was this?
I think this Lakshmi Vilas Bank had one episode, right?
Yeah. One. I think one more which was there just recently, where I think I had read about you guys.
The recent one, the SEBI order came on those 2 stocks, which is Sadhana and I think one more.
Yeah.
And for these 2 stocks, we had spotted all the video much ahead of time, and we had actively dissuaded the customers from buying them.
You have stocks like Brightcom, which come in different avatars every cycle, like Lycos. And okay, interesting. And what's the amount do users realize the benefit of this, or it's like a thankless activity for you right now?
it's very hard to figure if users like it or
Do you
not.
get some feedback like?
No, see, the thing is, post the event, of course, everyone will love the feature, right? As in, because you
Yeah,
get a
yeah.
lot of love.
Right.
But then, for every event that gets spotted, there are so many which doesn't get spotted, right?
Right.
So you don't know if it's annoying some users or not. So it's so even when we think of nudges, it is how do we make sure we are nudging without annoying a user,
Yeah.
right? So like for example, the first one was penny stocks, which are straightforward to do, but the ones which are the ones that are lined up next are a little more complex and requires us to build some more foundational bits in our tech stack. So I think in the next year, you'll see a lot of them coming. So things like around portfolio diversification. So if
Okay.
if you already hold a lot of banking stock,
Yes.
if you
I
buy,
think we did discuss this.
so we want to not saying you hold too much,
Hold too much.
right? Because a lot of investors forget the concentration risk, or when people are buying averaging down, right? Can you kind of nudge them and say, what, dude, it's probably not a smart idea to average down. It's the thing is, these nudges are very tricky
You
because
can go double-edged sword. Like ITC, if you had said that, you could have gone terribly wrong.
so what we've done for the next piece is that we have a global setting where
Okay.
these nudges will be set on by default, which is
Okay.
around
Very
concentration, around buying
Okay.
averages. So people can go
Change
disable.
that. And what about valuations? Let's say the whole Adani pack, which fell from a cliff. Do you think, of course, it might not be possible for you to do a nudge on these kind of stocks because these are possibly good companies, but possibly just overvalued. So, what do you advise here for
see, it's very hard to nudge on valuations, right? I mean, because good companies valuation are constantly, if you look at HDFC Bank, valuation has constantly gone up over the last.
What about leverage? Let's say maybe a nudge about companies which are highly leveraged.
Right. No, it's again, I mean, we don't want to get into that. Becomes advisory.
That becomes advisory, yes.
Right. So
and then you can be caught on the wrong foot.
Correct. Yeah. Right. So what we are saying is nudges is for basic money mistakes.
Right.
Like there are fundamental rules of managing money.
Yeah, the investment policy kind of thing.
So so if you break it, can you, like for example, we have something called as a kill switch, right? Which is, I think we're the only broker to offer, which is we want customer when he knows he is on a tilt. Tilt and trading is when you're losing some money and then you're trying to make it back very quickly, so you take more risk, and the chances of you losing even increases at that point of time. At that point of time, ideally the best thing to do is take a break, right? So what we've done is we have a kill switch, so a person can and instantly disables trading.
And does this come from your own experience?
Yeah, absolutely. I know.
Okay.
So
can you just give us a brief about how this has helped you about taking a break in the past?
No, I mean, see, the thing is, like a lot of people, we all like to celebrate heroes, right? As in, and we all think of heroes as heroes in the movies, right? He's about to die and then somehow recovers. That stuff doesn't happen in real life, right? As in real life, the best thing to do when you're in trouble is to not do anything, because at that point of time, you're really at your irrational most, right? When you say, I know I had 5 lakh rupees in my account and I lost 1 lakh rupees, which is really important for me.
Right.
Now, I'm wired to take more bets and higher risk to recover this 1 lakh very quickly.
Yeah.
But in that process, my odds of losing is actually much higher.
Okay.
So at that point of time, it's just a no-brainer. In any business, you forget trading, even in business, right? If you look at most businessmen, when the business is not doing well, they will start taking higher, larger, and random bets.
Disproportionate risk, yes.
Right. And of course, 1 in 100 works, but the odds are stacked against you for that to work. And so I think trading, business, they're all very similar in terms of the kind of skills that is required for you to do well, which is essentially around money management.
But could you just help with one example of your best investment and worst investment that you've made in your life?
I mean, see, so
with the name that you get.
Right. Yeah, no, I mean, see, best is by far Zerodha.
Apart from Zerodha.
The thing is, I personally stopped investing from the start of Zerodha, right?
No, but even before, like any stock which has stuck to your mind, like we relate Rakesh Junwala to Titan, is there something like that?
I've been a day trader before Zerodha,
Okay.
So if you were to ask me, I must have traded my best stock would have been Nifty futures.
Okay.
So,
Now, that's a good point. I mean, that's a safer one than individual stock options or stocks that people are trying to do nowadays.
Yeah. No, I mean, like I said, I don't think, every human is different, and I think the whole point of life is to discover what you are good at,
Right.
and not just cut copy paste because someone else is doing. Just because I built a business a certain way or I trade a certain way, I mean, it's a good information to have, saying that you can do it this way as well.
Yes.
But I think life is about just figuring out what works for you.
Yeah.
as a person.
99% people would not have this kind of time horizon in the first place.
Right.
The one which you had
Correct.
of
Yeah.
a decade and more. So Nitin, now coming to these exotic investment classes that are coming in, you've been very vocal about crypto and investors not investing. In fact, again, coming to your altruistic side, I remember you have tweeted about the markets being very high at times, about crypto not being the right investment, and you guys not getting it on the Zerodha platform. So you have been, to your own business's detriment, very vocal about such things. Now, as we go along with a lot of digitization happening, a lot of products are available at the click of a button, whether it's the debt side, which I feel is more risky because the credit quality is, the rating itself is not at times the deciding factor. So, what do you think? Who will nudge these guys? And any large event of markets being in a recessionary phase like in 2008 to 14 where equities did not do anything, what do you think will happen? Do you think it can be a big black swan event where the cascading effect of all these new guys in the market who have been there since 2019-20 have not seen any large corrections? How do you think, are you worried about such a situation, and any advice on this?
Yeah. See, again, there's nothing altruistic about it. I think I think our regulators have done a phenomenal job ensuring we don't, Indian intermediaries don't end up offering things which are regulatorily grey. One of the reasons I think crypto never really became more like a mass product because the regulations never allowed for it, right? And so one, and I've always kind of been vocal about not offering anything which is unregulated, right? Because you're just taking, as a business also, you're taking a really large risk for a limited upside,
Right.
And so outside of that, I think the concern over the last 2-3 years has been more people coming to the markets with the wrong expectations, right? Because when you come to the markets thinking you can make money easily and quickly, you tend to be disappointed, and that has been a problem in India, right? As in there's everyone's an influencer today, as in everyone's making like tweeting and putting YouTube videos talking about how to trade and how to make money easy, and everyone has found that on social media, if you want to create activity, you need to be loud, right? Which is, you need to say how quickly you made money or how easy it is to make, because the easier it seems, the more audience you get, right? And which is kind of the incentive is misaligned of sorts. So there are a lot of people who come to the markets thinking it's easy to make money, but if you look at it, over the last, actually from early December of 2021 or early Jan last year, the market has kind of plateaued, as in we have not gone anywhere. And a lot of that activity and momentum has dropped, right? As in the new user acquisition in the market is down like 35-40%. The trading activity on stocks, etc., is also down 30-40%. So yeah, in a way, it's already kicked in. And
what is the percentage of investors versus traders at Zerodha, that in case if you have that number in the back of your mind?
Like the first question is, who's an investor, who's a trader, right?
Yeah, maybe like the SEBI F&O analysis that came out, someone who's basically trading every day or every week. So
correct. Yeah. So we have out of the 11 million customers, there are 7 million who hold stocks with us.
Okay.
There are, on a daily basis, there are 1 million people active.
Okay.
And on a monthly basis, there are between 3 to 3.5 million people who are active.
Okay.
So the thing, I think what worked well for us as Zerodha is that we first built a business for the active trading community, which is your revenue generating community. Right. So and then it extended on to saying, we also want to offer it for investors who don't generate as much revenue or no revenue at all in many cases. So
but the 70 million is today, and what was this number at the peak of the bull market, maybe in 2021.
Right. No, the number is still higher today, but if you look at the growth,
The growth is tapered off.
Yeah.
But the absolute number is still higher.
Yeah, absolute number is still higher.
Okay.
So that is for us. But if you go look at some of the other brokers, a lot of them are probably sitting at a negative number compared to December 2021.
So there's a degrowth.
Yeah.
And your thoughts on this 1 lakh average loss by F&O traders? I mean, unfortunately, this number has not gone out in the media. I would have personally thought that the fear with this analysis should have captured the eye of more people, but unfortunately, the news has gone fairly unnoticed.
No, I think it gets noticed. It got noticed, but I think everyone thinks they're going to be the special one, right?
Okay.
So I mean, if I've been very vocal about
90-10, that kind of special.
No, 90-10 is okay, but in reality, is actually 199.
Right.
True. Because 90-10 is where 10 made any profits.
Anymore,
but if that's not the right benchmark, right? The right benchmark is a bank fixed deposit returns.
Yes.
Now, if you said, if I had not traded in the market, I would have kept money in a bank. Right? So that is actually 99-1.
Okay.
So... but even if you say 99-1,
yeah, people think they are the 1%.
They want to be
chosen ones.
They will somehow become the one without really. See, trading is really hard, and it will. It takes a lot of time, effort to get good at it. Right? There is no easy, quick way of making money in the market. So I think for people who are coming to the markets, the idea has to be to trade with as little money as possible and give it time. As in, you can't make money quickly, and give it 1, 2, 3 years. And if you consistently keep making money, only then increase your trading capital. Okay.
Right. Now, outside of this, what's your retirement plan? And a lot of people now, as per their financial planning, since we're at GoalTeller, we get these questions that I want to retire after 3 years, 4 years, at 40, 45. What do you advise these people? And what's your own retirement plan, if at all you've got any?
No, I mean, I had my retirement plan written down on my cupboard when I was 20 years old, which was, I'll make 5 crore rupees and I'll go to Goa, set up a shack, and allow my music, allow playing sports, etc. There'll be a shack, will have a live band playing every night. There'll be like a beach football thing happening, and yeah, so a lot of zeros have gotten added to that 5, and I don't think
it's still there.
I think retirement is hard. I mean, I think especially for people building businesses who are used to the rush of activity, it's really hard to kind of mentally retire and just become idle. Personally, I think what I'm very excited about outside Zerodha is what we are doing through Rainmatter, both the fintech and the foundation, through which we are supporting not-for-profits and for-profits working on climate change and livelihood. For people who are working and who are thinking of retirement, I think it's a good idea, right? As in, it's a good idea in today's world to think about retirement and think about it as early as possible. Because even if people don't voluntarily retire at 40, 45, their skills might become redundant by the time they're 50, 55, right? Because technology is just progressing so fast. So a lot of skills that people have gained over years can suddenly become redundant overnight when like a large technological changes happen underneath. Like, say, just for broking industry, for example.
Like the dealers.
I mean, yeah, not just dealers, as in the traditional way of running the business is really of no use anymore. Yeah. Right? I mean, like someone at Zerodha, for example, we were 1 million customers and we were 1,100 people on the team. We are 11 million customers and 1,100 members on the team. Right. So we could actually go to 11x without adding people, just leveraging technology.
Interesting, right?
And this would not have been possible in the traditional way of broking, right?
Right.
So I think it's a good idea that people are thinking retirement early. Like, this is something that I keep talking about, amongst my friend circle, as well as that life expectancy is kind of increasing because of medical progress, but your retirement age is probably reducing because of technological progress.
Yeah, but the risk, I think, is also about they're one wrong step away from bankruptcy again. Let's say if they go into trading, get complacent.
Oh yeah, no. I think when people say retirement, I don't think they can't be saying putting money in stocks, active trading.
But that's what's happened. Do you see that happening? I mean, I on social media we have seen that happening in 2021. A lot of people saying we have retired now, and trading full time, making 5, 6, 7% a month. Have you seen these people and seen these people dip?
In a sense, we don't really map user,
Okay, right.
to, and there is no data team at Zerodha sitting
Right,
and
okay.
analyzing these things. But anecdotally, I think some of that happened, but that activity is also plateaued, right? Because over the last 1 year, just the fact that it was so much harder to make money.
Right.
So a lot of that froth that was built up in 2021 is kind of reduced already, and also giving credit to the regulator, some of these regulations around leverage has meant that this bubble never really became too big of sorts.
Right. And what's your view on international equities? You think that's that entire excitement in front? Of course, the FM has now clamped down on that by increasing the TCS from 5% to 20%. Do you think that is still something which people should look at? I mean, you have famously said that if there is something which I will tell my kids or anyone is to stay in India for the next 20 years. And do you suggest that in terms of stock investments also?
No, I mean, stock investments maybe not, right? As in, I think it's a good idea to kind of have some dollar exposure, and it kind of, if you look at yourself as a portfolio, I think if you're concentrated into only India, then also it's a potential concern, right? I mean, I think we should have kind of exposure to other countries as well, but one of the reasons we never did international investing was, one, it was regulatorily always gray. As in, there is no explicit regulations that allow us for happening. Two was just the remittance cost has always been so high, right? I mean,
the conversion costs.
Yeah, I mean, if most of our customers are between 50,000 to 1 lakh rupees, if they send money out and try to bring back in, if they lose 2-3% in,
much more, I think.
Yeah, I mean, I'm just being, just telling the lower number there. Yeah. It makes no sense at all. Right. And so that never made sense.
Plus the taxes also are higher.
Yeah. I mean, taxes is okay. I mean, taxes is you're playing on the gains.
On the gains, yeah, sure.
Right? But now I think with this TCS though, it becomes kind of, it just, I don't think it adds up anymore, so to be able to do it. I think if people who think of international exposure, maybe, you have some of those international funds, right? I think maybe that's the right way to do it.
Last couple of questions, Nithin. So at Rainmatter, like what is that you look at in terms of entrepreneurs, etc., while making an investment? Secondly, the kind of services or kind of support that you guys provide is pretty incredible. I can see it firsthand that like an ecosystem. If I got to reach a Rainmatter company, I mean, it's just one call away. What is the end game with Rainmatter? Is there any end game in terms of making a conglomerate of fintechs, healthcare, or ecologically sensitive companies? Is there something like that?
No, I mean, see, the thing is, Rainmatter was never run as a for-profit initiative. Right. In our head, it was about, it started off saying, we need to help Indians do better with their money, and maybe what we are doing is not enough, and we need to kind of partner folks who are solving for this problem and kind of collaborate and see where there are synergies. That's how Rainmatter FinTech started. I've generally been very passionate about health and fitness, and so over a period of time, I started talking to some of the health and fitness startups, and because health and wealth are very interconnected, right? I mean, you can have all the money in the world, if you don't have good health, it's really not worth it, right? So we started talking to startups around health, and we said, is there a way there? It's kind of outside our core competency, because we can't really bring leverage of our experience.
Sure.
But we kind of bring in capital, which is not chasing returns and impact. And so for those startups, it kind of helps, to have a partner who is saying, I want Indians to have health conversations and think about health. So that's how Rainmatter Health happened. And with climate, climate change is really existential crisis today. And I don't think there's any way to solve for it. I mean, you can probably make small dents to this problem by attempting, so the way we are attempting, is to kind of partner with a lot of not-for-profits and for-profits as well, or working on anything around climate change. And there's no end game. I mean, these are all personal passion projects, and with Rainmatter Climate and Foundation, it also is very fulfilling to know that some of the wealth that you've created is kind of going towards something that is trying to solve for larger problems in life. So but that said, my younger brother runs a hedge fund where
Right.
so all our for-profit kind of objectives, we do it in public markets. We're not really chasing returns in private space. We're
Nithin, one big trend that you see in technology, climate, healthcare, and investments over the
Right.
next, because as at the stage that you are, I think you have a much better vantage view, than any one of us.
Yeah, I mean, see, investments. I'm very closely tracking what happens in the advisory space, because I think the next big problem to solve in investments is around advisory. Because you've gotten so many people to the markets, but who's going to teach them how to do it right? So one is advisory in the investment space, also around fixed income, because I think maybe the right stepping stone for India is fixed income and not equity, right? Because majority of Indians don't understand risk well. So maybe you need to introduce them risk by offering them something which is higher than fixed deposit returns, but lower risk than equity, right? So and now that SEBI has put in a bunch of regulations
around the online,
or online bond platforms, it kind of opens like a path for someone to come offer services there. In healthcare, I mean, see, it is Indians are just getting more and more conscious about health and fitness. But that said, the obesity problem in India is also going up, right? Because of fast food and etc. I think what we're trying to attempt is to just get the conversations going, which is to say that, are you aware that fast food is not good for health, right? As in, obesity is still not a pandemic kind of issue in the sense, like if you go to US, I think the obesity is like more than 50% of the population is obese, right? In India, it's probably around 18 to 20%. So we're still, kind of some distance away. And that's probably got to do also with our lower per capita GDP. And you don't have enough money to go eat as much fast food, right? So, but we will, as we grow as a country, it'll happen. And so we want to have those conversations running, that people are conscious. So I'm very, I think, a lot of these food products, which are healthier options, like a healthier bread, a healthier atta, because I don't think people will make drastic changes. I mean, like if I'm eating biryani every day, I'm not going to switch to salad very easily, right? But if I'm eating biryani every day, can I switch to a brown rice versus white rice, or a boiled rice versus so can you make small changes which can affect people? See, at the end of the day, to have good health, all you need to do is make sure you're moving and you're eating better, right? So we're kind of associating a lot of startups there, but it's very that market is still very nascent, right? So the revenue opportunity is not high today, but what we're thinking is, over the next 5-10 years, potentially for these startups that we are partnering, if they can do the right things and they survive the next 5-10 years, some of them can kind of do well financially as well. Because if someone does financially that well, automatically there'll be more people who will come, and which in turn, it's like it solves for other issues as well. Climate, it's a mega problem, right? As in, there are so many.
But any specific solution that you're seeing that could change?
I mean, so there are a few. Okay, one of the things I'm very excited about is an investment we have in this company called Zero Circle.
Okay.
So they're trying to build this alternate to plastics using seaweed, and which biodegrades in 30 days of sorts. A lot of attempts have been made in the past, but it never worked out because of the cost differential, right? Everyone eventually came back to plastics because plastic is cheaper and there is supply chain for plastics, etc. But the difference with what this company is making in terms of the price difference isn't too much, right? So so the thing is, can just plastic make a difference? It won't, right? As in, I mean, for climate change problem is so big. I mean, I'm very I keep searching for scientific research papers around conversion of waste into something non-waste, into carbon sequestration, not just using trees, but newer technologies. And so I think technologically people haven't taken climate change as seriously as people should, right? I think a lot more money has to go behind these projects which are working around kind of lowering the carbon footprint of the planet.
Mhm.
So there is no magic pill of sorts. There is.
And what's your view on AI? I mean, with this whole Chat GPT thing, and Elon Musk also recently tweeted that 2023 for me is I'll be focusing on AI. So, do you see any visible changes in your life through such AI tools?
I mean, see, AI generally has been a lot of hype till now, right?
Right.
Because I think FTC put a very interesting note. The Federal Trade Commission is saying, like, if you're claiming that you are an AI company, you should really have AI to claim it.
Yes.
Because today, I would say 90% of companies which claim they're AI aren't AI.
Yeah, absolutely. It's a pitch deck.
There are very few companies which are truly doing AI, like
Right.
OpenAI and etc. Right? So, no, I think eventually, it'll change the way companies work. It'll change the way we both consume products, and all of that will happen. But I don't think we're still there yet.
Right.
I mean, ChatGPT is very interesting, but I mean, there's a lot of eye candy for a few days, but it was just for a few days. I'm back to using Google for everything. So
Right.
yeah. So but eventually, I think the next 1, 2, 3 years, it'll keep getting better. So customer service, search, all of these for sure will get disrupted, right? I mean, in the next 2, 3 years, within our org, even our support database, the way we've built it is knowing that tomorrow we could essentially feed this entire database to like an AI engine, which can potentially chat with the customer and
Interesting.
and maybe answer a lot of queries that otherwise comes to us. But I don't think we're still there yet. So.
And Nithin, lastly, a lot of people want to see you as a shark. What's your views on that? Like, are you yourself keen on going on Shark Tank, though you got your Rainmatter already there?
Yeah.
So,
No, I mean, I think the thing is, firstly, the Shark Tank has done so much in terms of messaging. So I think it's a phenomenal job in terms of going out to tier 2, tier 3 cities and people wanting to be entrepreneurs. See, at the end of the day, one of the investments that we do as a business is also, I mean, as Rainmatter is also around storytelling, right? I mean, because see, India is a poor country, and the only way India will get richer is if there are more entrepreneurs, and only way there'll be more entrepreneurs if there are good storytellers out there, right? And one of the reasons why I have an incentive to come and talk like this is because maybe someone looks at it and hears something and helps in his entrepreneurship journey, right? So the same way, I think Shark Tank has done a great job there. But I don't think that format is really like me, in the sense I can't firstly speak good Hindi, so right, and and I don't like one of the things when it comes to investment, I don't really invest outside my core competency, right? As in I don't invest across the board, and it's finance, it's health, and now it's climate. And because this is where I believe I have any value to add. I can't judge a company which is like yesterday I was talking to a company who was in the pharma space, and I had no clue. I mean, I had no advice to give, and I had no context at all. So we are kind of investing very contextually to where our experience lies. So maybe
won't
not
see you there.
Yeah, not the right format for me, but it's but generally I think they've done a phenomenal.
And lastly, Nithin, to sign off, could you help us with 3 of your best books, songs, and movies?
I mean, movies changes based on season,
but whatever, like
right. I mean,
series, movies.
Yeah. I mean, I just rewatched The Godfather, so
all the ones, or
all the 3 of them, and so I think this is probably my 6th or 7th time I've rewatched it. In movies, and the founder, on the McDonald's. I mean, I think that was one of the newer movies around business that I really liked. I mean, otherwise, people who like trading, I think, The Big Short, Margin Call. I mean, I think these are all almost like a must-watch. Around books, I'm actually consuming more podcasts than books. I mean, I'm a big fan of the All In podcast, and I think it's just the format is quite nice, and the guys who come on the show, just there's so much knowledgeable. So I think I'm consuming a lot of that. I also like a lot of business wars and
Okay, interesting. And which ones?
No, the Business Wars, the podcast itself.
Okay.
And Guy Raz does an amazing job with talking about businesses and talking to founders.
Right.
So that, I mean, but in terms of books, I think the last one that I really liked was The Anarchy by William Dalrymple. This was around. I mean, the reason I'm saying that book is because this was around how the East India Company came to India for trade, and as they grew bigger, how they went from like a business to everything else, right? And in a world where we live in today, where the big tech, are just so powerful today. As in, the question is they're probably as powerful or more powerful than a lot of countries. Right. So the question is, do they ever show their evil side at some point? Right? Because at the end of the day, the concentration of power historically has turned people evil.
Or is it already going on and it's not seen?
It's not seen, right? I mean, it's hard to say. Right. So I think the book, if you read that book in that parlance, I think it's very interesting. Songs, I mean, I listen to everything. My favorite band is the Pink Floyd, but I also love a lot of Kishore Kumar and all of that.
And Lucky Ali, I think
Lucky Ali as well.
Saw you singing along with him a year or two back.
Yeah. Lucky Ali is also very popular.
No, thank you so much, Nithin, for being on the show. So I, as a wealth manager myself, handling like billions of dollars over the last many years, I can tell you, meeting the largest families, I think I have not come across someone who has been as open to questions and as down to earth as you. And thank you so much.
Thanks a lot.
Thank you. Bye.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.